Anthony, today we are talking about stablecoins, Bitcoin, the future of money, and I want to take you back to the 90s. Okay, I know a long time ago, but you and I are old enough that we remember getting online, and what that meant was going, for me, it meant AOL. For you, was it AOL? Was it Prodigy? Was it CompuServe? Where did you go?
In the very beginning, it was CompuServe, but then AOL just swept everybody away, and that's where everybody went. I still have an AOL mail account.
Yeah, we got mail. And anyway, and in the little, that dial up from your modem, and for you kids, I mean, I know this seems like a long time ago, but you couldn't use the phone while you were on the internet because it ran over the same phone line. But at that time, AOL gave you the basic stuff: email, chat rooms, news, and it was a simple doorway into this new future, the internet. It was centralized. AOL wasn't the internet. People thought that was the internet, and they were getting on the internet, but it was a very centralized internet, and it was really dominated by AOL, Prodigy, and CompuServe, and in particular AOL. Underneath AOL was this much bigger protocol. They were open protocols, right? TCP, the web, email, all these things. We're not going to get into how the hot dog's made. I don't even understand very well how the hot dog's made, but those things like TCP were open protocols that anybody anywhere in the world, no matter what you believe, no matter what you thought, you could build upon them. And for a while, AOL, Prodigy, they had a nice run, right? AOL in particular became, at one point they bought Time Warner, I believe, right? Which was a huge, huge company at the time, one of the biggest companies in the country, and this little startup bought them. Well, all those companies went away. Why did they lose the battle? They lost the battle a lot because the open protocol throughout history almost always beats the closed protocol. And I think this is a little bit of what's happening with stablecoins, Bitcoin. Right now, stablecoins are very hot. They're having remarkable success, and we're going to talk about that. But they are a closed protocol, right? Whether you go to Tether and you're in Tether's system, or you go to Coinbase, or all of the banks are creating their own. There's a whole bunch of them. They're in a closed system where Bitcoin is a permissionless, open, anybody in the world. It doesn't matter if you are Russian or Ukraine. You can build on Bitcoin. You can store in Bitcoin. You can use Bitcoin. You can take your wealth with you anywhere in the world by, memorizing a seed phrase and whatever. It doesn't matter. Enemy, it's money for everybody, freedom money. So, I think stable coins are just better banking software, but let's get into that. You may disagree. And, I think they're a bridge to a bigger protocol. And I think the pattern is going to be very similar with stable coins and Bitcoin as it was with AOL and the internet as a whole. So, Anthony, I know you have thoughts about stable coins. So, um,
Yeah, let me
tell
let me let me try to explain it. I think I understand them. I definitely don't know what bridges we're going to be crossing in the future with both stablecoin and Bitcoin. I can't predict the future anyway, but the simplest use case that I know of, I hope I explained this well, is let's take the country of Venezuela. They've had in the past, rampant inflation, uh, so much so that people were getting paid 2 or 3 times a day because the value of their currency was dropping every single day. So if they had $100 in Venezuelan currency in the morning, by dinner time could be worth, $50. So what they could do is, when they had that quote unquote $100 in Venezuelan currency, they could buy a stable coin, buy $100 worth of, or convert $100 worth of Venezuelan currency into whatever the equivalent U.S. dollar amount would be. Let's say it would be worth 50, and now it's in a stable coin. It's backed by the U.S. dollar, so that they have now escaped Venezuelan inflation, and they've bought U.S. inflation, essentially. So, of course, U.S. inflation is still inflation, but it's a lot less than Venezuela. So that $50, for all intents and purposes, will be $50 tomorrow, will be $50 on Friday, will be $50 in a month from now. So it preserves their buying power. So that's the repository for their money. What I don't understand is how they can spend it. I don't understand the mechanisms for their ability to spend it, to get it back, convert it back to a Venezuelan dollar so that they can buy bread and so forth and so on.
Let me put a couple more details on there. First thing, yes, it's backed 1-to-1 with US dollars, and the biggest player is Tether. So let's just use Tether. They're the 600-pound gorilla. At one point, Tether had more revenue than Goldman Sachs, and they had 80 employees. I think they might have 200 or 300 employees now, but they are a runaway success. And you'd asked me a question before the show, how do they make revenue? Let's make sure we hit on that too. But so if somebody, it doesn't matter if it's Venezuelan money, Argentinian money, Turkish money, Japanese, eh, Australian dollars, euros, they all go in and you're taking your money, as you mentioned, and you're pegging it to the dollar 1-to-1. How do they do that? Okay. What's going on behind the scenes? Well, Tether, if you put the $100 in from your example, they buy $100 of US bonds to back your money. So really,
I
you're buying US dollars. I mean, look, dollars, if you really think about it, they're debt. The whole US debt system is US bonds, and debt is really what's underlying the dollar. That's a bigger whole topic to itself. But they are buying $100. So no matter what, if there's mass inflation in the US, you're still going to get your $100 back, right? You're guaranteed to get that. And they did an audit, I think within the last year, certainly within the last 2 years. They have all the bonds. They have a crap ton of US Treasuries. In fact, right now, I believe Tether alone is something like the fourth or fifth biggest buyer, somewhere in that ballpark. I might be off by a couple numbers, of biggest purchaser in the world of US bonds. Okay. So that's how they make money, by the way. You put your $100 in, they take your $100, they buy a $100 US bond that pays these days 4 or 5%. They're mostly short term, so probably more like 4%. And now they're making $4 a year on your money, but they're doing that with billions, I think trillions of dollars at this point, right? Hundreds of billions at least, probably. And they're making that 4 or 5% spread on all those bonds. Then what Tether does, they take the profit each month. They get the profit, they get the payouts, they pay all their expenses, their handful of employees that they have, and then they bought Bitcoin like crazy. They're one of the biggest holders of Bitcoin in the world. They don't want to save. This should tell you what you need to know. Tether doesn't want to keep its money in US dollars. They know that there's an inflation problem. So they take their profit, they hold your money in dollars, they take their profit and put it into Bitcoin. Now, they've started diversifying in the last year or so. They've been buying real estate, they've also been buying gold. So now they've got a little more diversity, but still a big part of their stuff is in Bitcoin. Does that explain better how it works, or does that make
Yeah,
sense?
no, that's great. So why would a US citizen who buys a stable coin, what's the upside for me putting my money in the stable coin? $1, I'm going to get $100 back.
Good question. Only, I guess, if you trusted Tether more than you trust your bank, which, by the way, you probably should, because Tether has 100% dollar-backed reserves, and they've got Bitcoin, gold, and real estate sitting on top of that from all their profit over the years, right? There's billions and billions extra. So they not only have all your money and have been audited, they have more than your money, right? They have more than 100% reserves. Well, if you go to the banks, I don't know what the current number is. When I wrote my book and I did the research at that time, banks had loaned out about $25 for every dollar they had in deposits. So if you buy $100 worth of Tether, they put $100 in bonds, its reserve, you will get your $100 back. You put $100 in Chase or Bank of America or Wells Fargo or whoever you bank with, you're going to get your money probably, because the government's not going to allow that to happen. They'll just print more. So you're probably backed. But they take your $100 and they loan out $2,500, either to one person or multiple people. They're supposed to have 10% reserves. They're only supposed to do out 100. But as of a few years ago, the average was 4% they held in reserves. That's really the difference. Okay. And by the way, your bank is loaning it out. They take it, pay you 0.01% or whatever ridiculous interest rate on $100, and then they loan that out to 25 other people at 4, 5, 6, 7, 12, whatever interest rate they're loaning it out at.
But where are they getting the actual capital? to do that?
Who? The banks?
The bank, yeah. So let's say that
They print it. They print
the
it.
bank has the bank can't print money.
Yeah, they do. They do. They really do. All printing money means in 2026 is they change some numbers on the screen. When the bank takes your $100, they now legally, but nobody enforces it, have the right to loan out $1,000. They're not getting that $1,000. They're just all the bank is betting on is there isn't going to be a run that not everybody's going to come looking for their money at once. But they literally, so if you put your $100 in, I go to the bank and say, I need $1,000 loan. They don't have my $1,000. They have your $100. They just add 1,000. They just take the numbers in their computer and they add $1,000.
So let's for the listeners, let's walk through this because it is a little confusing, and it's going to lead to a discussion on the possibility of a banking collapse. Let's just put that at the end of the road here. So when I buy a house, I need a $300,000 mortgage. I put, you know, $25,000 or $50,000 of my own cash. I take it out of the bank. I give it to the builder. Now I need another $300,000 when he finishes building it. He is receiving $300,000 in cash. Where does that, if the bank has lent out everyone's $100 25 times, 10 times, 25 times, where is that actual cash that's going to go into the builder's bank account? Where does that come from?
PMF or PFM, pure effing magic. Okay? Pure effing magic, Anthony. It is, I know this is hard to get your mind around. They don't have that money. They create it. They literally change numbers. So they now have a note and you have a liability for $300,000 to the bank. They have they have a credit on their balance sheet, right? And they put $300,000 in your account. They just change the numbers on a screen. I'm telling you, everybody thinks the Fed's the only one that prints money, but any bank that's giving loans in US dollars, there's banks outside the US. There's the whole Eurodollar system that has trillions and trillions in it, and nobody knows how much it is. There's European and banks in the Caribbean, et cetera, that write these loans and give out US dollars that don't necessarily even have US dollars. This isn't just US banks. This is all over the world because the US dollar is the world's reserve currency, at least for now.
That builder got $300,000 worth of currency that he could spend. So it has to move from Chase Bank to Builder's Bank.
So
they're just both making up the numbers?
They're moving numbers around on a spreadsheet on their computers. Okay. So let me ask you this. This is a hard concept, so I don't mind spending some time here. This takes a while to get your head around. And it's not that happy of thoughts when you really get your head around it, by the way. So you had a very nice exit from Pella a year or two ago, right? You got a nice check. How much of that did you get cash?
Technically all of it.
No, I mean cash, dollars, like that you could put in your pocket or a briefcase or your trunk.
Zero.
Okay. So what did they do? Now, Pella happened to, sold it directly back to Pella, probably had the cash in their account, but you were talking to people that were looking at financing, right? People that didn't have, there was a certain number. They had to go to the bank, get it. The bank, if it would have gone that way, okay, and maybe Pella got it financed too, but I'm going to assume they had the cash. But if you had sold it to an individual like me, I would go to the bank, get the loan. I would now owe the bank that money, and the bank, they basically are going to take, they're going to take the number, they're going to take X, I'm going to owe them that, and they're going to put that in your account. Their books are balanced, right? X goes into your account. They just change the numbers, right? They're literally just, if you get paid, they just change the numbers. It's zeros and ones in a computer.
Well, and I guess they're hoping that their survival depends on a continual flow of new money coming in to finance those decisions. The
We call that a Ponzi
That's what I
scheme.
was about to say. I said, this sounds an awful lot like a Ponzi scheme.
Yeah, it is. Now, it might be the safest Ponzi scheme going, right? Because you got the backing of the U.S. government, the U.S. military, however you want to look at that. They have the money printer. They're never going to default, in my opinion. They're going to print money. That's what nations have done throughout time. I mean, we can go back to Kublai Khan. We can go to the Persians. We can go to the English, the French, the Germans, Weimar Republic. That's why you mentioned the superinflation or hyperinflation in Venezuela, where prices literally can change overnight or during the day. That's because instead of defaulting on the debt, they're just going to print more money. So it's not that you lose your money, it's that your money becomes worthless. It won't buy as much. That's what's happening with inflation. And inflation, they're trying to keep it at 2%. And really, their strategy at 2% inflation is, we can steal 2% a year from you, Anthony, because you won't notice. You won't notice if we steal 2% a year. Now, when it starts getting to 5, 10%, politicians start losing jobs, right? And 20 and 50, and some of these places have had thousands. I mean, our little inflation here is nothing compared to Argentina, Venezuela, Turkey, Zimbabwe, on and on and on and on.
Well, we'll have to
This
come.
happens. This has happened.
We'll have to come back to this
Yeah.
in another episode and talk about what could be a banking crisis, and go through history and talk about how every fiat currency has eventually failed and what happens when that happens. So we'll come back to that.
Yeah, the whole system's built on debt. I think the last thing to do before we move on, stable coins are U.S. dollars. It may not be a physical dollar bill you put in your pocket, but it is a U.S. dollar. Spends the same, gets inflated the same, right? Just not as quickly as some of these. It's kind of the tallest midget, or the least dirty shirt in the hamper is the phrase that's used a lot. So that's when you're buying a stable coin, you're doing that. But if you live in Venezuela, where inflation is thousands of percent a year, 2 to 10% is a huge win, right? There's a whole arbitrage opportunity there, et cetera. But that you're buying fiat currency, the difference is it is not controlled by Chase Bank. It's controlled by Tether or Coinbase or whoever's stablecoin you buy.
Are there any stable coins in other currencies?
Yes, but I believe the number, well over 90%, and volume-wise, I think over 99%. It's huge. It is in U.S. dollars. But there's a euro one, and there might be some other ones, but they just don't. For now, at least, people want the dollar, right? We'll see. We print enough money, they won't. But for now, people would prefer to save in dollars versus their other stuff, right? So let's talk about the difference between stable coins and Bitcoin. They are not the same thing, right? One of them is dollars. Another one is a completely new banking system. Here's the other thing. Even so, if you want to audit Chase Bank, how do you audit Chase Bank? How do you audit Bank of America, Wells Fargo, or wherever your money is, to see how much they have? Like once a quarter, I think the SEC comes in, but you don't really, it's pretty hard to audit them and know what's going on in any given time. If you remember a couple of years ago, there was the bank run at Silicon Valley Bank. Literally, that thing happened so fast, okay? There was it Peter Thiel, or it was one of those guys, one of the Silicon Valley guys put out a warning saying, hey, these guys are way overextended. By the way, the SEC, the government, had given them a clean bill of health like a week before this.
The Fed did.
What's
Yeah,
that?
the Fed.
Yeah, they came in and inspected. They passed with flying colors. All of a sudden, a bank run happened in like 24 hours. They were done. I got tied up. I had no idea I even had exposure. My payroll company kept their money at Silicon Valley Bank. All of a sudden, they took our money for payroll, and we couldn't get it out of Silicon Valley Bank. It got tied up for a week or two later. We got it back, but we had to find an alternative way to do payroll that week. Not a lot of funds. That can happen again. A stable coin might be safer than that because Tether is backed. However, Bitcoin, let's look at what's been going on in in Iran and the Strait of Hormuz. Iran started charging these tolls to go through the strait, and they said they would either take stablecoins, they would take, they would take Bitcoin. Some of the ships paid with Bitcoin, right? $2 million, or I forget whatever they were charging. Some of them paid with stablecoins. $354 million worth of stablecoins, the U.S. government came in and froze. Iran didn't get the money. We froze the money. If they can freeze that, that means they can freeze your money and my money. Now, they probably don't have a reason. It's probably safe. And they couldn't freeze the Bitcoin. Iran has the Bitcoin now. It's freedom money. Doesn't matter where, again, I mentioned Russia and Ukraine. Both countries, when people are fleeing, Bitcoin has become very popular. A lot of these places that are doing very poor and people are fleeing, and refugees, it's a way that they can get money out of the country. So to me, that's the really big thing, is it's freedom. You can send it anywhere. You can take it anywhere. You don't need their permission, and they can't stop. The full force of the U.S. government couldn't stop the Bitcoin payments to Iran. But with one little phone call, they stopped $354 million in stablecoin payments.
Explain, you'll do a better job of it. Explain why they can't stop it.
It is, I don't want to get too wonky and technical, so I'm going to try and keep this oversimplified. But the Bitcoin network, I don't know how many nodes are running, but you can have the entire transaction ledger on your computer, anywhere in the world, right? It doesn't matter. You live here in Austin, Texas, or you live in Kenya, or you live in Tokyo, or you live in Melbourne. It doesn't matter. You can run the entire history, every transaction in the history of Bitcoin, you can keep on a computer and have and verify it. And it's decentralized, much like a torrent site, right? BitTorrent was a big deal back in the day because if you hosted this music, it was pirated music, mostly games, whatever else, books. If you kept the music on a centralized server and shared it with people for free, the government could just come turn that down. But what happened there is the same song would be shared on 1,000 or 100,000 different servers all over the world. There's no way to enforce that. There's no way to shut down 10,000 of them simultaneously, right? Well, the same thing with Bitcoin. It's on millions of machines in every country in the world. And some of it's even, it's being using satellites and everything else. So it's really decentralized. The miners, again, there's Bitcoin miners securing the network all over the planet. Okay, the number that I always talk about, the size of the Bitcoin network, okay, all the computers securing the network is not just the biggest computer system in the world, but if you add up the next three biggest, which I believe are Microsoft, Apple, and Google, Amazon, and Microsoft, I think are the 2, 3, and 4. Them combined are something like 1/50th the size of the Bitcoin network. And the other difference is Bitcoin naturally goes to the cheapest energy. These waterfalls, like you go into a lot of the northern places, there's these waterfalls that maybe could, produce 100 units of energy, but only 20 can get used because there aren't very many people there. It's a natural place for a Bitcoin miner to go because there's basically free energy. That's just green, free energy. They can use the excess of that waterfall, turn it on, turn it off. One of the most amazing things in Bitcoin, what's happening in Africa. Millions and millions and millions of people are getting access to energy that never would have got energy because there was no financial incentive. In fact, there's places in Africa that pay less for energy than we do that didn't have energy a couple of years ago. They've built these Bitcoin mines because there's a waterfall. There was a great place to do energy, right? Or a river. They dam it. They produce all this. They use whatever they get, the local community, they sell it to them for like 10 cents a kilowatt hour, which is way less than, I don't know what the average is in the US now, but I think it's pushing 30. And they sell it to those people for 10 cents a kilowatt hour before, by the way, I just heard this the other day. NGOs have been building these power plants in Africa for years, and they tend to run like 70 to $1.50 or something. But Like the cheap ones are running at 70 cents a kilowatt hour, even though they were built 100% with like charity or NGO money. The people can't use them. It doesn't help the local people. Nobody's using the power because they charge 70
They can't
cents where the
afford it.
Bitcoin miners are charging 10. So it just attracts and it goes into every little crevice, and it's just out there looking for opportunity and cheap energy and people that need this, whether doesn't matter where they live. Does that explain it? I mean,
Yeah,
it's super
yeah.
decentralized would be
Now
the way to sum
go
that up.
back to what you said earlier about you can see every transaction on your computer. What if I had to if I wanted to send you 100 Bitcoin, $100 worth of Bitcoin?
I like the first
Yeah,
one.
no kidding. Is that just going to be zeros and ones showing up on the screen, or does it say Anthony sent Randy $100 worth of Bitcoin?
The transaction, you have a public key and a private key. We're getting really wonky,
No, but
but
in terms of,
people
but
that
it's still
do, by the way,
private.
I never look at this.
It's still
What's that?
it's private. It's still private.
Yeah, like you don't know, like if you sent me $100 and Mary wants to look at the chain, she can see that $100 transferred from your wallet to my wallet, but there's no name
That's
attached.
okay. So the reason I brought that up is this is where the governments have had a problem, and the Iran example you gave illustrates it. The transfer of Bitcoin from one entity to another is because it's private. There's a lot of problems with that in the sense that illicit activity transactions are happening using Bitcoin, and that's one of the major, not downsides, but major issue that governments have with it and have tried to regulate it, and to this point have been unsuccessful. Do you think someday they're going to be able to regulate it? I mean, or is it just so
No,
decentralized it can't happen?
at some point it's so decentralized, Anthony. Here's a good way to look at it. We think of China as being very authoritarian, right? Russia, we think, boy, Putin, what a guy. What an ass. China has made Bitcoin illegal multiple times. In fact, before they made Bitcoin mining illegal at one point, they had over 50% of the hash rate, which is the computer power, the processing that was pointed at mining Bitcoin, was in China. They made it illegal, and now Texas leads the world because a lot of the Bitcoin miners, and they went to Kazakhstan and they went other places, but a lot of them came to Texas. So that just chased people to a different jurisdiction. If Texas made Bitcoin mining illegal, they'd go to El Salvador, they'd go to Kazakhstan, they would just go somewhere else, right? So they're chasing, New York chased away a lot, Canada chased away a lot, both of them. And it's dumb because there was literally the waterfalls I was talking about earlier and the unused electricity that they're now just wasting instead of having a tax-paying company there. But it's just China couldn't make it illegal. China buys a lot of Bitcoin, like private citizens, and still almost something like 20 or 25% of the world's hash rate, the processing is still in China, even though they made it illegal. India made it illegal. Couldn't stop anybody. Russia made it illegal. Now, Russia's come back around. They're collecting Bitcoin and mining. All three of those countries are, well, I don't know about India. Russia and China are definitely mining Bitcoin as a country, as are several other countries. So all it takes is one jurisdiction. And as great as our military is, I mean, we can't finish Iran off in whatever it's been, months. We can't fight the whole world. Like there will always be, it'll be like whack-a-mole. And there's no way to shut down. And again, I don't want to get wonky, but there's a new block every 10 minutes. In order to hack it, they would have to hack like millions of machines in 10 minutes simultaneously in all different jurisdictions.
Yeah. So,
Right? It's just too
so,
hard.
so Bitcoin has been, was a few dollars, 10 years ago, and now it's, $80,000 per coin now. For those people that have invested in Bitcoin and enjoyed the capital gains, if you will, of Bitcoin, if it's in a how does the government, the United States government, get its share of the capital gains on it? How do they know when if I have if I'm in possession of my key, a thumb drive with my Bitcoin on it, and I transfer $5,000 of it to you? How's that? It's like selling a stock. Some amount of that was capital gains. How does the government get their hands on it?
So it depends on how you sell it. It depends on your wallet. Banks have something called KYC, which is short for Know Your Customer. They can track the money. If you have money at a given bank, right? Bob's Credit Union, doesn't matter. You have money at a given bank, you send it to Coinbase and you buy Bitcoin. They're going to go, Anthony, where'd this $100,000? What did you do with that? Now, if you don't sell the Bitcoin, there is no capital gains. Just like if you don't sell your Apple stock, there's no capital gains. But when you sell it, you're probably selling it to buy something. So now you're going to transfer it back to your bank. And the bank is going to report, hey, Anthony had $100,000 come through. And the IRS is going to know that. Now, if they really want to go after you, they can start connecting dots, but that's an expensive process, right? That happened to Ross on the Silk Road, but they put enough resources into it, but that's really expensive to do that forensic accounting. They're not going to do it for a normal person.
So my Bitcoin is stored at Coinbase. Your Bitcoin is stored on a thumb drive.
Correct.
Okay.
And we need to get you to the other ones.
Yeah, I agree. So now I can see how Coinbase could create a 1099 or something, that I don't know if I bought and this is the problem. I bought my Bitcoin at a bunch of different prices. So if I want to sell, 25% of my Bitcoin, do I tell Coinbase I want to sell this Bitcoin that I bought at the highest price so I minimize my capital gain, or do they take the average over time? I
would talk to an accountant at this. This is not.
You should have known this by now. You've been at this a long time.
This is not financial advice, but the way mine works is first in, first out. Okay. And there's some stuff in Congress right now. One of the things they're talking about in the Clarity Act, I don't think it's going to get through, but I hope it does, is the de minimis exemption, so that a certain amount, if you buy coffee or you treat it that it doesn't get reported and it doesn't matter. You can spend it and it treats like that would be unbelievable for the Bitcoin market. But I want to emphasize something, that where you are is a great first step, but you're still counting on a counterparty. You're still trusting Coinbase. Now, Coinbase is making money. I don't think you're in any danger anytime soon. I'm not the biggest fan of Coinbase, even though I have an account with them myself. But you're trusting, Anthony, that they hold your Bitcoin. But you can't audit it. You don't know that they have your Bitcoin. And probably because Michael Saylor has billions there and BlackRock has it and all these different companies have it, I'm pretty sure they've done their due diligence. But you don't really know, number one. And number two, if the government comes in, and Brian Armstrong's the CEO of Coinbase, and the government comes in and says, hey, Brian, I'll tell you what, we want Anthony's Bitcoin. And Brian says no. And the government says, great. You know what? We're the ones that make the laws, and we're the ones that have the cages. We're going to go throw you in this cage for the next 10 years if you don't give me Anthony's Bitcoin. Or freeze it or whatever. Brian Armstrong's freezing your Bitcoin. He don't give a shit. Now, if you have it on a thumb drive, or you have it in cold storage or a paper wallet, I don't care. You have it on your own. You are opting out of that corrupt, over-leveraged system. You are taking your money and going into a different system. You're making a choice to say, you know what? Now, there's responsibility that comes with that, because you have to remember your own keys or keep your own keys and keep them safe. But you're saying, I'm not counting on Chase Bank. I'm not counting on Coinbase. I'm not counting on anybody else. I control. And there's ways you can do multi-sig and a bunch of other stuff in case you lose your keys. I would recommend Coinbase, who actually is a sponsor of this show, but I haven't, or not Coinbase, Unchained Capital here in town. We just haven't actually run the ad or whatever, but we have a link to them I would recommend for multi-sig. You're taking control. Nobody else. If something happened, God forbid, and you had to bug out, you could take that with you and nobody could stop you.
So that's where I was going earlier with, the tax man. So you're a former professional poker player. Let's say you and I let's say I have a thumb drive and you have a thumb drive, and I win $50,000 from you in a poker night. And you say, okay, I just got to pay in Bitcoin. You plug your thumb drive into your computer, you put in your keys and transfer 50 grand to me. I plug it into my computer, I accept it. Does anybody in the world know, and does any government in the world know that happened?
Not if it's not KYC, right? So let's say I have a blank wallet, right? Okay, I've got a cold storage. Never been used. I bought it. It's mine. There's no Bitcoin on it. You send Bitcoin to it. Nobody knows it's mine. Somebody else sends Bitcoin to it. Nobody knows it's mine. It could be a million transactions. Nobody knows it's mine. Now, if I take that Bitcoin and I send it to my Coinbase account and I cash it out, they have a clue because Coinbase is again, Coinbase is still part of the old system. Or I send it to Chase Bank, or I send it wherever, right? All of these banks have KYC. They are going to report it to the government. If the government wants to look, and it's not that easy, they could start connecting dots, right? Like I've got a cold storage where some of it came from Strike, some of it came from Coinbase, some of it came from, I forget what it was called, but the one I used to use before, it was called Coinbase Pro now or whatever. Like I probably have Bitcoin that's flowed into that wallet from 10 different places. And about 8 of them had KYC. So guess what? Even the 2 that aren't KYC'd, they know it's mine, right? They can track it. So you would have to keep a completely separate wallet that is not tied to one that has ever had transfers from your accounts.
And that, I guess it only gets flagged when you convert the Coinbase to dollars or to some currency. The world down the road, like El Salvador, they're a Coinbase-based monetary system now, and their supermarkets, their gas stations, all accept Bitcoin. So in a different world, it's going to be a different world someday.
It's coming. Even this is what we're talking about right now. The AOLs are winning, right? Coinbase is AOL. Right now they're winning. It's centralized. But in the long term, decentralized always beats. It just will, right? There's advantages to being centralized. And there are advantages to it, but long term, it's just more and more people are going to see the need to hold their own keys, protect it, etc. All right, anything here before we move to our final little section.
No, this I was just about to say. The two of us have very different reasons we got into Bitcoin, and
Yeah.
I'll explain Randy's.
Well,
I'll explain Randy's.
You'll explain mine?
Yeah, I'll explain yours to the.
Go ahead. I want to hear this. This is good.
You believe there's an apocalypse coming. You don't know if it's tomorrow or 20 years or 50 years or 10 years, where the US dollar and other currencies are going to fail. And they're much like Venezuela and Turkey and those other countries that had runaway inflation. It's going to happen at some point that the money printers will have printed so much money, which means borrowed so much money, that the interest payments on that money is going to exceed all the other expenses that the country needs to spend their money on. Right now, the debt on the U.S. debt, the interest on the U.S. debt is larger than what we spend on the military, and it's growing every day. So
something like 1.2, 1.4 trillion.
Yeah, it's
right now, and getting worse.
So every reason to believe that there's going to be a financial crisis. It has happened. You've educated me on how many times it's happened in history. You referenced it earlier. And so this is your safe haven when that happens. Did I do a good job?
Pretty accurate. Yeah. I will tell you, I first was introduced by a gentleman by the name of Andreas Antonopoulos. And I heard him talking about it, and he talked about freedom money. And freedom money very much appealed to me. And I've known this problem for years. I mean, I started reading books on this 25 years ago. Most of those books back then said buy gold. And I just never quite got on the gold band. It was one of those things I intended to do because I could see it was coming. I wasn't convinced that it was imminent at that point. Our debt was still low enough to GDP that there was a way to get out. And the Fed, though, we're never willing to pay the price. We're never willing. It's the analogy that I like is it's like somebody that is an alcoholic and they need to stop drinking, but they don't want to have the hangover. But if you keep drinking enough, eventually you're going to kill yourself. And they just keep drinking more and more and more. That's what happens with dollar printing, right? The worse the debt gets, the more they have to do it. And look, I don't know when it's going to happen. Could the dollar go another 50 years? It could. I underestimate the Fed's ability to kick the can down the road, but I don't see how the math works. To your point earlier, there's over $1 trillion in debt. Okay. We only bring in $5 trillion a year in tax revenue. I'm sorry, over $1 trillion a year in interest on the debt. Okay. Like right now, it's something like 25% of our tax revenue goes to paying that interest. And I don't know if you just saw 10 years up, right? They didn't raise rates, but the market is saying, I don't know about these dollars. You're in a war, oil's going up, and interest rates are going up. That means interest payments are going to go up. Also, very interesting, and I don't want to take us too far down this. I have been watching Japan like a hawk for years because Japan is further down this road than we do, and there's some societal differences, and they actually own a bunch of our debt. They're the biggest holder of U.S. Treasuries is Japan, but their debt is terrible. We don't have to go back very many years. Japan actually had negative interest rates, like negative a quarter. I think at one point they got to negative 0.5%, which is insane. And then they were at 0 and they're 1. I just heard Japan's interest rates are now over 4%, and they have basically double the debt that we do. They're cooked. Unless they cut spending like 80%, they can't pay their way out. Think about what happened, and we got to turn this back into tales of abundance, not tales of misery. But if Japan starts going, they're going to sell their dollars, which is going to put more bonds, more supply and demand. The Fed's going to have to print more money. There's really a trigger there and a domino effect that happens that Japan, rolls through, not just the economic impact. So I don't know when it's going to happen. I'm not saying it's going to happen tomorrow, but I am telling you it's inevitable because if you do them, I just do encourage you, do the math, do your own research, go on AI and ask it, if we keep doing this, how do we get out? How does this end? It's how it has to end. So for me, I came for freedom money. I liked the idea of being able to send money. I remember right before I heard Andreas, I had just sent like $10,000 to a Hong Kong brokerage account to buy some stocks in that region. And I used to do that fairly frequently before I started buying Bitcoin. Well, Chase Bank would charge me a $40 wire fee. It would take 9 days. And then I wouldn't get 10,000 in my hunt. By the way, it was dollars going to dollars. There was no conversion. It would take 9 days, $40. So I'd send basically 10,040, intending to get 10,000. But what would really show up in my account would be like 9,998. They'd steal between a couple pennies and $10 every time, which has irritated me more than the $40. Right? Even though, and they would say it was the exchange rate. Well, there was no exchange. We just took dollars and put it in a dollar denominated Hong Kong brokerage account. Okay. With Bitcoin, I thought, oh my God, I can send this in seconds all across the world for like pennies. And it's there instantly or close enough to instantly. That was a big part for me. And I saw the freedom and the sovereignty and being your own bank. And I already knew the banks were a middleman that I wanted out of my life. And they didn't need to take a cut of everything. So for me, it really was about a new financial system. I was hoping it was going to be easier. This might be a 25, 50, 100-year process of changing this system, but I think it will happen. And it's going to create freedom and abundance in the world. The faster it can happen, the better. And so it was a way to diversify. It was my, at that point, Anthony, the US dollar was still my plan A. Bitcoin was my plan B. Those Hong Kong stocks or Asian stocks primarily were my plan C. And then I started buying some gold and silver miners that were my plan D. I have since sold. Bitcoin has become my plan A. The C and the D I got rid of. I sold those to buy more Bitcoin. Even real estate. I sold a condo to buy more Bitcoin. It's just math. Nobody can print more of it. That's the big thing, right? We don't know how many dollars there's going to be tomorrow, next week, certainly not next year or 10 years from now. We just know there's going to be more of them because they keep printing. Yep. And that's where inflation really comes from. I do know there will never be more than 21 million Bitcoin.
The reason I got into Bitcoin, I have a traditional portfolio of stocks and bonds that's managed conservatively. Frankly, if you look at, and you mentioned gold and silver as other hedges against inflation, I didn't get into gold and silver either, even though my Uncle Tony, when I was in high school and gold was at a $300 ounce, said you should be investing in gold. It's going to go up. It's a great place to save your money. But that said, and it's true, if I had done that, it would have gone up however many percent it's gone up since 300 to 5,000. But over that same time, the traditional S&P 500 has returned with dividends has well outperformed gold.
No, it
No,
hasn't.
yes, it has. It absolutely, positively has.
You keep talking. What was the year he said?
1970. If you go back to we did this. I did it Saturday with my.
You keep going.
I'm just telling you, we did the math on this, and it's significantly higher since 1970 over both gold and silver. That's fine. But the reason I got into Bitcoin, while you chat GPT it, I got into it as a diversification. And I'll never, I bought at a reasonable price, and I've made, significant gains on that part of the portfolio, more so than I've made in the market during the same period of time. But I didn't buy it for the gains. I bought it as protection against what you're worried about. Not for me necessarily, because I'm, of an age where it's unlikely that there'll be a worldwide collapse in my lifetime. But I was worried about my grandkids. You worried me enough that I wanted to have something for them, the five of them, just in case. So it was at one time it was just a couple of percent of my portfolio. Now it's significantly more of a percent of my portfolio because of its growth. But that was the singular reason I did it, was to protect them just in case. Now, my hope is that your fears are unfounded and the government somehow generates enough revenue without collapsing the economy to start paying down it. England, it took 100 years for England in the 1800s to get rid of their debt. They were in a similar position at the end of the 1700s, and it took them almost the entire century to get out of it, but they did get out of it. Now they're right back in it again. I guess they didn't learn their lesson, but that's what wars will make you do.
How did they get out? Well, that's how they got in.
No, they got out by spending less than they took in. So they cut spending. And the biggest spending cuts came from not being in any wars. That's really where the trouble starts. Germany, you mentioned Germany earlier, they just printed dollars to fight World War I. And then, they spent all their money to fight World War I. And then the Allies demanded reparations. And in order to meet the payments of reparations, Germany had to print marks, German marks, or whatever they were called back then. And that basically destroyed their economy. And they never did pay back the reparations. And then Germany and the United States decided, and the European nations decided to get into another war in World War II. And then when we finished that one, we decided to go to war in Korea.
Those reparations and that broke and that inflation is what led to Hitler, the Nazis, right, and really, in a lot of ways, forced them into the war. I mean, I think history does not represent this well, but England got out when they printed all that money because, one, they cut spending. I forget if it was 80 or 90%. They cut spending. That's what Argentina's doing right now, is they're cutting spending and it's working. So there is a way out. I just don't see any appetite, the way the U.S. system is set up and the way corporations and lobbyists and all these people, the way that these politicians get super rich, right? They make $170,000 a year and they have 10, 20, 50, $100 million net worths. That's insane. And that they are so incentivized to make themselves rich that I don't see any stomach for us to have cut spending like that. I just don't think it's going to happen. And by the way, England also got incredibly lucky. It was the Industrial Revolution.
So productivity
went through the roof, and they cut spending 80 or 90%. Now, we could have the greatest industrial. This could make the Industrial Revolution look like a little kid's tea party. Okay, like what AI could do, we could have massive. We might be the luckiest people ever, Anthony. I'm less we are going to default on the debt, and we could be so lucky, our generation, that if AI, robotics, all these things, increased energy creates all this abundance, that it may not be as painful as we want. And I will also tell you, for me personally, wealth wise, that would be really, really beneficial for me. And I absolutely do not want that world. I hope we avoid that, because I'll be okay either way. And millions and millions and millions of people are going to struggle if that happens, right? Because most people don't have Bitcoin or something. They don't have another asset. Even the stock market, right? Lots of people don't own stocks. Stocks aren't going to perform like Bitcoin, but they will perform. They'll perform plenty well. By the way, let me just share you a little screen here, because you're not going to believe me otherwise. You're not going to like this. Um, According to the Chat GPT, I asked it, if I bought $1,000 in gold in 1970, what would I have today? And if I put, oh crap, 100. Oops.
You got to make sure you
Okay, well,
say
we got to,
include dividends.
yeah, here. Okay. So including dividends, you are right.
I am right. I know. I went through this with my son-in-law
All right, you're right. I'm wrong.
on Saturday, and I were having this discussion, and he's
Okay.
hoarding, not hoarding, he's buying gold and silver solely. And I'm trying to get him to diversify into some Bitcoin as well, because he has the same belief. He's doing it for exactly the same reasons you got into Bitcoin. And he also believes that with silver, that there's going to be a shortage of the actual material because of all the things silver's used in, so may or may not be.
Yes. Okay. So, and look, it doesn't have to be Bitcoin. Gold will work. He'll be okay. He'll do better with Bitcoin, but he'll do fine with gold and silver. By the way, if I wasn't buying Bitcoin, I would probably be buying energy. And I think the need for energy in these data centers and all, like, somewhere I would be playing that game. It might even be copper wire, but it would be real things that are going to keep being valuable no matter how much money they print, right? So, well, let's talk about what has changed since you first got into Bitcoin.
Nothing significant has changed other than, Bitcoin has become mainstream. It's, there is an acceptance of it. And, the great banker, Jamie Dimon, I think he called it a shell game or something. He had some derogatory statements on it, as did many others. Chase is buying Bitcoin faster than it can, lend out the money. So suddenly his mega bank is in with these individuals, this revolution, really. And that's the way I looked at it. It was a revolution, and now it's mainstream. BlackRock, you name it.
Mainstream amongst the very rich, by the way. These big corporations, the billionaires, which is a little disconcerting for me, right? Because I came into it for freedom money. I don't really want to be on the same team as BlackRock, but here I am. And one of the things we always say in Bitcoin is it's good for you, it's good for your enemies. Nobody can take it away. And it was inevitable. We said this was going to happen. It's just a little uncomfortable now that BlackRock and Chase and all these people are playing the same game. But if you listen to billionaires, I don't know what percentage own Bitcoin now, but it's high, like a high percentage of them are putting more and more into it.
Why would it's become a trading asset? It wasn't a trading asset in the very, very beginning, when people first got into it. It went from $8 to $800. People sold it at $800 to buy a car or pizza or whatever the heck they're buying. I know those folks, they call it an $80,000 pizza now, I think, is something that some people have said, because that same $8 is worth 80 grand now. So,
well, I think it's worth more than that. I think that was 10,000 Bitcoin, Anthony.
Maybe, I don't know.
I think it's like $1 billion. I think it's like $1 billion
like
pizza.
So, whatever the case, it's a mainstream. It's like Apple stock. There's people are buying Bitcoin ETFs, they're trading it, they're getting in, they're getting out. And that's, I think, one of the advantages and disadvantages. It can work both ways. As people are trading, the volatility is there, because, if it goes up, now you have BlackRock, it isn't a person trading it, it's a AI bot or agent trading it every day. And if it goes up by, 0.5%, they go and grab some gains and then they hedge it going down. It's become, like I said, just a regular tradable asset. So it's mainstream, which is good for me, because if I ever needed it, I could sell it and get my money and be done with it. But that's not why I have it.
So I think a good way to sum up what you're saying there too is that, whether it's Jamie Dimon or whoever, by the way, BlackRock was against it early on. Larry Fink had terrible things to say. Then Larry Fink became one of the biggest advocates. Michael Saylor, who owns more BlackRock, their company owns an insane amount of BlackRock, of Bitcoin, right? He first came out and tweeted, "This will never work," right? And that it was, and then did more research. And the saying is, you don't change Bitcoin, Bitcoin changes you. And so many people have tried to bend Bitcoin. They've tried to ban it. They've tried to do anything they could to change Bitcoin, and they're never successful. But people that eventually they come around. And I look at this a lot like when gunpowder came around, right? The samurai were these fierce warriors that nobody could beat, but they would not embrace gunpowder. And then other people came in and killed all the samurai because they wouldn't embrace gunpowder. Similar thing happened when the whole world went to gold and China chose silver. China got run over because they picked the wrong horse. And I think the same thing's happening in Bitcoin, is that people fight it, and then eventually you're either going to embrace it or you're going to get run over by it. And maybe that's not today, but the earlier you embrace it, the more benefit you'll get in the long run. But so for me, what's really changed is I came in for freedom money and how to spend it, and with this thought of I'd be able to buy coffee with it, and it really has become more of a store of value. I think we need to get back to the freedom money and the spending, and I think both things need to happen. But also the stuff, like I said earlier, the power plants and bringing power to millions of people in Africa and around the world and all of those things, I think are some of the really coolest thing, or people that are fleeing, you know, any war-torn country or any place that they're trying to get away with their wealth, and them being able to take their wealth with them. I mean, it's really changing lives in ways that I didn't necessarily think of. So let's put a bow on this thing, Anthony. I think stablecoins have a place. They're new rails, they're payment rails, they're faster. I think they're actually safer than the banks, in my opinion, but you may not trust Tether more than you trust, whatever your local bank is. But Bitcoin is a whole new system. It isn't a way to replace the current system entirely, where stablecoins are just building on top of it, right? And it's permissionless money. Listeners, download, subscribe, tell your friends, and we will talk to you after the break with the abundance briefing.
There are tales of abundance. We know that fitness is just as important as money or milestones. It's one of our key 5 F's for lots of us. Taking care of my body while I build my life is one of the more time-consuming and difficult goals to chase. That's why we're partnering with AG1. It's a daily drinkable habit. Less than a minute, that's formulated with 75 plus vitamins and nutrients and designed to support energy, digestion, and immune defense. It even has a few grams of protein that we're all chasing these days. And if you want to try it with our affiliate link, you'll also receive a free AG1 flavor sampler, plus vitamin D3 plus K2 with your welcome kit when you first subscribe at $72 value. Go to shop.drinkag1.com/tales.
Listeners, welcome back. Well, we lost Anthony during the break. I don't think he didn't find his way back from the bathroom, and John made it in. So, welcome to this episode, John.
I made it all the way back, which was great.
There you go.
3 minutes, it could be dangerous.
There you go. So, let's talk about the IPO race that's going on. I mean, this is really something going on. Like there's SpaceX is the big one. Let's start there. Like reportedly they're targeting a $1.75 trillion valuation in June. I mean, I've heard people predicting it's going to go to 2. Some people say it's worth 1.5. I mean, I don't know. You start throwing around $250 billion, pretty soon you have some real money. I mean, what are your thoughts on this? Look, I
think you look at just to kind of give reference, Bitcoin has 1.5 trillion in value out there right now.
Yeah.
Apple, 4.5 trillion. Google 4.5, almost 5 trillion, Berkshire 1 trillion. And so I think, I heard someone say that this, SpaceX was going to be a referendum on Elon Musk. But when they did that deal with Anthropic, I don't think that's true anymore. I think it's really about it's a bet on compute, it's a bet on AI, it's a bet on SpaceX is the name of the company, but it holds a lot of technologies.
Tell
And
tell
so I
people
think,
tell people listening what you mean about the deal with Anthropic.
well, I think, there's two massive data centers that Elon has built and is building, and Grok wasn't getting the utilization of all of that. It just didn't need all of it. And so he sold that compute and energy to Anthropic, and Anthropic has soaked it all up, contractually. I think the number I heard was that Anthropic is going to be paying $1.25 billion per month
Yeah.
for that compute,
Yep.
roughly.
A
And
3-year
so
with a
it's
3-year contract. So 15 billion a year in extra revenue from that.
yeah. Yeah, and so I think it's a really interesting. So I mean, there's a couple of things going on here. One is like, what is the actual valuation of a tech company of that size? Like I think, and can we see multiples that far in the future has been one of the questions I hear about the public markets on a regular basis from kind of non-Wall Street people. And then you know, I think one of the assumptions about AI is that everything gets easier if you keep doing the same amount of work. Never in history have we created technology where the amount of work stayed the same. We've always increased the workload. So I think it's super interesting, and I think that I'm I'm happy and excited to see the public markets doing some of these things. There's some real questions about how much liquidity is in the market. How much can the market soak up? I think a lot is probably the answer. There's been a lot of money in the sidelines for a long period of time. From my perspective as a non-insider, I don't know that much about Wall Street. And then I think the other thing that's really interesting is, how important is it going to be first to liquidity, that liquidity market? Like how important will it be that, I think SpaceX probably gets there first. I think Anthropic is ready to file all their paperwork to try to get trading. And I think OpenAI is now cleared to go to. So it's going to be interesting.
Yeah. Well, to your point, I mean, they're coming, right? Anthropic, they're talking about another $1 trillion company, and then OpenAI, another trillion. And again, maybe it's 800 billion, maybe it's 1.2 trillion, or whatever, wherever that range is. There's 3 new $1 trillion companies potentially, plus some of these other companies. Cerebras, I'd never even heard of them until a couple days ago, and I just listened to an interview with their CEO, that's in the data center thing, and made a little different play. So there's a lot of money flowing into a lot of things. And to your point, is there that much right now? I think they're about ready to print money like a drunken sailor. I think they are forcing themselves into a corner where they have no choice, and that money will flow into the market. But it is going to be very interesting. I mean, how long was it? Was it Apple that was the first $1 trillion company, right? Well, and wasn't that like 2020 is all? Like it was just
It's
yesterday.
pretty fast. And, and we see that kind of acceleration happening on the finance side, kind of like we've seen it happen with Moore's Law on the technology side. I think to me, I'm hopeful because I think this means that you're going to see more technology available to more people is my hope. I think right now, I am concerned about a widening gap between the haves and have-nots on a lot of levels, financially, technologically. My hope is that this makes it, easier. I think part of the challenge, though, is that, those companies have been subsidizing users from a cost perspective. We saw this happen with software as a service years ago, where all of a sudden prices jumped massively, and we're already starting to see that. And so, yeah, I'm very fascinated to watch this. I'm hopeful that it means great things for our society. I think we're going to be solving bigger, important problems as we go, and I think that's our next topic. But yeah, I'm enthusiastic, and I'll keep watching enthusiastically.
All right. Well, let's go. Let's go to the next one. This one is fascinating. It's a little hard to explain, but the gist of it, or the big picture, is OpenAI. Now, this was an internal model, not the model you and I have, right? Us mere plebs. But the OpenAI internal model cracked an 80-year-old math assumption. And it's basically about how many plots you can put on a map. And they thought that doing a grid was the best. And this has just been accepted, and other stuff built upon this for 80 years. It turns out AI proved this wrong. And it not just wrong, like they found out there's many better ways to do it, right? It's literally solving math. We've talked about this before. And I think both Anthony and I were like, I don't we both had a hard time getting our heads around what does it mean to solve math, and I'm still not sure I have it. But they proved this thing wrong. It's 80 years old. So what says you? What's Dr.
Yeah,
John?
I think look, this is really interesting about like, how many dots can you put one unit apart on on infinite plane, and what's the best layout for that? And so I wouldn't even know how to conceptualize beginning to look at that problem. And my understanding is that AI found not one, but like a ton of better
Right.
answers.
Yeah.
And so what does that mean for like, here's the things that I hope for. I think we can then take this and say, hey, based on what we know about people, maybe we can figure out what is going to happen with drugs more effectively. And maybe we don't get to the answer of yes, this drug will work for this, but we can at least rule out a whole bunch of things we know that it won't work. Or I was talking to a doctor yesterday, and it's, one of the cool things is that if we get really clear about one individual person, maybe we can get closer to understanding how something's going to work for that person as a digital twin. Like I think like the whole concept of digital twin, whether it's a digital twin for a person or a community or whatever. I think this opens up a lot of possibilities. Maybe, and it's not just about being able to do this, but it's about being able to do it cost effectively. And so, if we can keep driving the cost of this digital twin idea down, boy, I think that makes for a lot of positive things. Randy, my dad died of renal cell carcinoma in 1984. I was 11 years old. I have a friend who's diagnosed in the aughts, who's alive and kicking, 20 years later and has a really great prognosis. So just from 84 to 2007, so what is that, 16, 22 years later, totally different prognosis for the same disease, right? And so what happens if we can accelerate that? And that causes a whole series of other questions we've got to get answered. They're difficult, but as it, like looking back to my 11-year-old kid, I certainly wish we'd had better technology then.
Yeah, I mean, you start changing, like what's interesting to me about this, right? This is something that many, many humans, evidently, like mathematicians, this is something they have put eyeballs on. And there was just an obvious answer that you put these out as a grid that everybody just thought, oh yeah, that's logical, that's right. And nobody's questioned it, right? Or if anybody questioned it, nobody was smart enough to prove it wrong, whatever. And I don't think this is that consequential that we were building a lot of other math on top of it, but maybe we were. But I think this happens, this is one of my sticking points is we have all these things that are considered truth, and that's the exact opposite of science, right? Science is you're supposed to be questioning and coming up with new thesis, trying to prove things wrong. And I think this is fascinating. And the breakthroughs, like who knows where we're stuck because we just made a left turn when we should have made a right. Not anybody meant bad. They thought they figured it out and they didn't. I mean, I think it's through.
Yeah, but I do think it's like made a right turn, but should have made a deeper right turn or a different right turn. Like, I think that's the thing about science is there are some times that science goes 180 degrees the other way. That happens. But more often it takes it further the same direction and we learn more and more and more about it. So I think, I never want to be so worried about the next scientific breakthrough that it paralyzes me from what I need to do today. But to your point, like what will this unlock
Right.
for a whole bunch of other things? And my hope, I don't have any evidence of this yet, but my hope is that it's going to unlock quite a bit in terms of like personalization of medicine as a place where I'm really passionate. And I think that's going to be a big unlock. I think there's other things too, where we just, people are going to be able to continue to take large quantities of information and synthesize it. I do think one of the challenges with AI is we're creating more content. It's like camera phones, right? More pictures taken last year than all of human history combined was a thing that was said several years ago. And so it's like we're going to be creating more content in a year than we've created in all of human history at some point, probably in the near future. We've got to be careful because consuming that content and making sure that content is valid becomes a real issue.
Well, look, I should probably make something clear. I think that the way science is going in any given direction, we should keep building there, right?
Yeah.
But we should be building in every direction. Like, let the free market work in the scientific community. The free market is one of the most amazing things in the universe that no human actually understands, no matter how much of an economist they think they are. It's beyond comprehension. So if it's a certain drug, like I'm going to take cancer, which is one that's dear to my heart lately. All of the research pretty much goes into better ways to do chemo because there's no money in all of these other methods. And and they keep going down that direction, and that's fine. Keep making chemo better. I'm 100% in favor, right? However, there should be money and effort and energy going in 100 or 1,000 different
Well,
directions.
on a different episode, let's ask about basic research versus applied research. Like that's a really important question we haven't touched on yet. That's for a different episode. Here's what I'm also excited about: the scientific method and the amount of peer review that, in my view, has become less rigorous than it was years past. I think this type of view will hopefully increase the rigor for science, which I'm a huge fan of. So.
All right,
Speaking of alternative views, let's jump into this next one about alternative views. I'm really excited about alternatives.
I mean, really, John, this is building on what we just talked about. Demis has I don't know, I don't want to butcher the man's name, but anyway, the super genius AI, Demis Hazzabis, he says that AGI is going to cure all disease. And originally he was saying it was like 2030 or beyond. Now he thinks by 2029 that this could actually happen. We could just cure all disease. And that's a lot of what we just talked about, right? Curing math, curing science. Like when you start getting
here's the deal. Like I'm back to the personalized medicine thing. I'm pretty skeptical about that one, in the sense that, like, could we cure every type of cancer for a person? I don't know, maybe. But like, every body is different, literally. And so I just, the number of times we've heard we're going to be at Mars by 2021, and then 2022, and then 2025. And like, I think AGI is really exciting. I think there's a lot of promise. I think getting people excited about that is a good thing. I think having all disease cured by 2030, like, that's cute. I hope I'm wrong, by the way. I can't wait till someone comes back in 2030 and pulls up this recording and is like, hey, Oberg, look how wrong you were. Like, I will absolutely go buy Dennis dinner and be like, hey, man, like, my bad. But it's hard for me to see that.
Less concerned with the date, right? And that's if it's 2029 or it's 2035, it's pretty close, or 2040, right? And
even if it's 2099,
this guy has not been wrong a lot. I mean,
even if it's 2099 and we're moving that direction, like, I would hate to have someone get. Here's the thing. It's like, people are going to be naysayers if someone gets the date wrong or whatever. I just think it's the wrong thing to focus on. I think you focus on, like, what we are actually doing, and all the things it's amazing. And so if you say things that are debatable or arguable, then we start the argument, versus like, look how far we're going. Look how many cool things are happening. More gratitude, more abundance mindedness.
Yeah, real simply, let's say we wiped out 25% of the disease that kills people now, or that affects people, right? In those 5 years, like, how much better is the world? If we miss this by 75% and we wipe out 25% of disease, that's just a huge, jump.
I mean, look at what's happened for, like, polio and measles and a couple other things like that. If we could knock down 10 more diseases like that in a shorter period of time, so much excitement there. So I really would hate to have the argument be about the date, and more about, like, how do we put more energy into getting the work done. I'm really excited about that too.
And our final topic is just going to be a blip. We're going to go real fast. Mexico is basically creating a land-based rival to the Panama Canal. What it is instead of going through the Panama Canal, which is very slow, backed up, it's quite a thing to actually go look at if you've ever been there. But ships take, I don't know, days or weeks to get through. They laid train track. You take it, they offload the ships, they run it on the train across the country real quick, 300 kilometers, load it on another ship, and off they go. I think it's fantastic. It's just, we need a competitor to the Panama Canal, because one, it couldn't handle the traffic. Two, they're underbidding Panama and doing this more cheaply. So congratulations, the cartel's getting more powerful. There's my cynical side for the day.
Yeah, I don't know. Yeah, listen, I don't want to put a target on our back. Look, here's and with robotics and unloading and all the cool things we're doing there, and I don't know if it's one rail or two rails in parallel where you can send them back and forth. I don't know how that works at all, but, like, how exciting to take 300 kilometers, right, and say, hey, look, we're gonna increase throughput, right, through rail. Right. Like, we're talking about AI, and now we're back to rail. Right. Like, super cool. Like, I think that my hope is that it narrows the gap for people as it reduces costs for goods. And so it hopefully does that.
And if anybody wants to know how important this is, look at the Strait of Hormuz, right? Like having one choke point is not a great thing for a global economy. So anyway,
it's great.
that wraps it up. If you're still here, you obviously love us. We're obviously the best. That means go download, subscribe, tell your friends. And until next week, everybody go out and spread a little abundance.
See you, Andy.
All right, bye.